Sometimes I feel like investing is this big mystery
Hmm.
that you need like a secret decoder ring to understand,
Yeah.
like, what is a PE ratio anyway? Like,
Yeah.
who came up with this stuff?
Exactly.
But what if I told you there was a way to cut through all that noise and just like make investing simple?
Okay.
Like common sense simple.
I like where this is going.
Right. That's what we are talking about today. The Little Book of Common Sense Investing by John C. Bogle.
Classic.
This book, it's not about some, you know, get rich quick scheme or options trading or anything like that. It's
Hmm.
about building wealth over the long term.
Okay.
And Bogle, he wasn't some Wall Street hotshot,
Yeah.
He was the founder of Vanguard.
Right.
He really believed in empowering the everyday investor.
That's great.
And his big idea was that low-cost index funds, they're the key.
Interesting.
Like, that's how you build a really solid financial future.
And I'm guessing he backs that up in the book.
Oh, yeah. He doesn't just tell you what to do.
Okay.
He explains the why.
I like that.
So one of the big things that he talks about is this idea of buy and hold investing.
Mm-hmm.
But it's more than that, It's like when you plant a tree,
What do you mean?
you pick a good spot, you plant it, and you let it grow.
You don't dig it up every day to see how the roots are doing?
Exactly. You give it time.
Right.
And that is what buy and hold investing is all about.
So time in the market, not timing the market.
Exactly. Trying to time the market.
Yeah.
That's like digging up the tree every day.
Right.
It can be a recipe for disaster.
Yeah, you're just hurting yourself at that point.
And it's because when you invest for the long term,
Mm-hmm.
that's where the magic of compounding really kicks in.
Oh, yeah. Compounding, that's important.
Let's say you're earning like a 7% return each year.
Okay.
That investment is going to roughly double every 10 years,
Really?
thanks to the power of compounding.
Wow.
It's incredible.
Yeah, that's amazing.
Yeah. So compounding is like that snowball rolling downhill. It just gets bigger and bigger.
And gains momentum.
Exactly. But Bogle's approach isn't just about buy and hold.
Okay.
He's also really passionate about fighting against high fees.
Fees?
Oh, yeah. He calls them the silent killers of returns.
Oh, no.
Because it's easy to overlook those fees,
Yeah, they don't seem like a big deal.
Like what's 1% or 2% here and there, right?
Right.
But Bogle wants us to really think about the long-term impact of those fees. Okay.
Because they can really add up.
Gotcha.
We're going to dive into that a little bit deeper later.
Yeah, I'm looking forward to that.
But before we do that,
Mhm.
I'm curious to hear from you.
Yeah.
What is standing out to you so far?
Well, I think this whole idea of focusing on the long term
Yeah.
and being aware of those hidden costs,
Mm-hmm.
that's really resonating with me.
Yeah, it's about making smart decisions with your money.
Absolutely.
Decisions that are actually going to benefit you in the long run,
Right.
not hold you back.
Exactly.
And, this whole idea of being aware of fees and compounding,
Yeah.
it kind of goes hand in hand with this idea of like, can you actually beat the market?
Okay. Interesting.
That's what we're going to talk about next.
I'm ready.
So can we really beat the market? I feel like that's the million-dollar question.
Yeah.
It is. And, a lot of people think you need some kind of secret formula or insider knowledge.
Right. Like you need to be on Wall Street to have a chance.
Exactly. But Bogle, he challenges that assumption.
Okay. How so?
Well, he points out that even professional investors, those active fund managers,
Yeah.
they actually struggle to outperform the market consistently.
Yeah, really? Even with all their resources and experience?
Yep, it's true. Bogle found that over the long term, most actively managed funds actually underperformed the market.
Wow, I had no idea. So it's not just about being smarter than everyone else.
No, not at all.
Right.
In fact, trying to outsmart the market can often lead to worse results.
Okay, so if we're not trying to beat the market, then what's the alternative?
That's where index funds come in.
Index funds, yeah. They're like the unsung heroes of the investing world.
Okay, I'm intrigued. Tell me more. So instead of trying to pick individual stocks or time the market perfectly, index funds simply track a specific market index, like the S&P 500.
The S&P 500. Okay, that rings a bell.
Right. It's made up of 500 of the largest publicly traded companies in the U.S.
Okay.
So when you invest in an S&P 500 index fund, you're essentially buying a tiny piece of all those companies.
So instead of putting all my eggs in one basket, I'm spreading them out.
Exactly. You're diversifying your portfolio.
And diversification, that's a good thing, right?
It's essential. It helps to reduce risk.
Okay, that makes sense. But what about those fees we were talking about earlier? Are index funds still a good deal, even when you factor in fees?
That's the beauty of index funds. Because they're passively managed, meaning They're not trying to beat the market.
Yeah.
Their fees are super low.
Like how low are we talking?
We're talking like a fraction of what you'd pay for an actively managed fund.
Okay, that's huge. So not only am I diversifying my portfolio, but I'm also keeping more of my returns.
Precisely. It's a win-win.
This is blowing my mind. So if I wanted to start investing in index funds, what would you recommend?
What Bogle was a big fan of the Total Stock Market Index Fund.
Total Stock Market Index Fund.
Okay. There's a really popular one called VTSAX.
VTSAX.
It basically lets you invest in the entire U.S. stock market with a single purchase.
Wow, that sounds incredibly easy and efficient.
It is, and because it's so diversified, you're essentially riding the wave of the overall market.
And minimizing my risk.
Exactly. So it's
Yeah.
a great option for long-term growth.
I'm sold on index funds.
Okay.
Now, what about those other tips Bogle talks about in his book?
Well, besides investing in low-cost index funds, Bogle also stresses the importance of staying the course.
Oh, right. Don't panic sell when the market dips.
Exactly. It's easier said than done. I know. But remember, investing is a marathon, not a sprint.
True.
There will be ups and downs along the way, but the key is to stay focused on your long-term goals.
So I shouldn't check my portfolio every day.
Probably not. It's more important to have a solid plan and stick to it.
Easier said than done, but I hear you. So stay calm, stay the course.
Exactly. Bogle's whole philosophy is about tuning out the noise and focusing on the fundamentals.
Makes sense. So we've talked about index funds and staying the course. What else did Bogle emphasize?
Well, he also had some interesting thoughts on international investing and diversification beyond just the U.S. market.
Okay, that's interesting. Tell me more about that. So Bogle was a big proponent of index funds and staying the course, but he also had some thoughts on international investing, right?
Yeah, he did. He definitely acknowledged the importance of diversifying beyond just the U.S. market.
Makes sense. The U.S. is only one piece of the global economy.
Exactly.
Yeah.
And there are a lot of opportunities for growth in other parts of the world.
So how did Bogle recommend approaching international investing?
He was still a fan of keeping it simple and low cost.
Okay, no surprise there.
Right. He suggested looking for international index funds that track broad market indexes, like the MSCI EAFE index, for example.
MSCI EAFE index, what does that one track?
That index covers developed markets in Europe, Australia, Asia, and the Far East.
Okay, so it's like the international version of the S&P 500.
Kind of like that. Yeah. It gives you exposure to a wide range of companies outside of the U.S.
Interesting. So even though Bogle was a big believer in the U.S. market, he still saw the value in diversifying globally.
Absolutely. He recognized that international markets can have different growth cycles than the U.S.
So it's all about managing risk and maximizing returns.
Exactly. Diversification is key, whether it's across different sectors or different countries.
This is great stuff. It sounds like Bogle's approach is all about finding that balance between simplicity and diversification.
I think that's a great way to put it. He gives you the tools to build a solid investment strategy without overcomplicating things.
And he emphasizes the importance of keeping costs low and staying focused on the long term.
Absolutely. Those are really the cornerstones of his philosophy.
This has been a really insightful deep dive into the Little Book of Common Sense Investing.
It's a classic for a reason.
It really is. So as we wrap things up, what are some key takeaways our listeners should remember?
Well, I think the biggest one is that investing doesn't have to be complicated or intimidating.
Right. You don't need to be a Wall Street whiz to be a successful investor.
Exactly. Bogle's approach is all about simplicity and accessibility.
And it's about taking control of your financial future.
Absolutely. He wants to empower everyday people to make smart investment decisions.
And a big part of that is understanding the power of compounding and the importance of starting early.
Couldn't agree more. The sooner you start investing, even if it's with a small amount, the more time your money has to grow.
And don't forget about those fees.
Oh yeah, those pesky fees. They can really eat into your returns over time.
So be a fee detective.
Exactly. Compare those expense ratios and choose low-cost options whenever possible.
And finally, remember that investing is a marathon, not a sprint.
Right. It's about staying disciplined, sticking to your plan, and not getting spooked by short-term market fluctuations.
Bogle's book is a great reminder that common sense can go a long way in the world of investing.
It's a message that's more relevant than ever.
Well said. Thanks for joining us on this deep dive into the Little Book of Common Sense Investing.
My pleasure.
And to our listeners, we hope you found this conversation informative and empowering. Happy investing, everyone.